When running an organisation, it is important to have a board of directors who work well together. Making the right decisions and knowing what to do is called good corporate governance. This ensures that the company and everyone involved is making honest choices in the best interests of the stakeholders. So what makes a board of directors succeed? Let's look at the top 10 reasons why they don't. The first reason boards fail is not having the right people. Some directors might not have the relevant skills or experience, or they might not understand the importance of their role and responsibilities as a director. A board of directors is only as good as the people who sit on them. The second reason is not keeping directors up to date with recent developments. Directors need to know their roles and responsibilities. This includes understanding financial reports. Directors should never be kept in the dark. Directors should always be informed, and new directors must be trained and equipped with the right information to help them fulfil their duties. The third reason is not knowing the rules of the organisation. The company constitution is like a rule book. It tells the directors, management and the staff what the organisation can and can't do and how it should operate. All directors should be encouraged to learn the rules and know how to change the ones that don't provide good results for the organisation. 4. Another reason is not making decisions in the best interests of the organisation. The chairperson and the directors need to promote responsible decision making. Effective decision making will keep the company strong and will allow it to grow and prosper. Reason number 5 is not recognising potential problems and risks that might threaten the organisation. By identifying any problems, directors can ensure the organisation is well prepared to weather any storm. Whether it's finances, management, staff or physical environment, directors must know how to deal with problems as they arise. A good way to do this is to keep a checklist of potential problems, risks, and ways of dealing with them if they arise. Reason number 6 is not using the organisation's assets responsibly. Assets and funds belong to the organisation, not one individual or the board of directors. Directors should ensure assets and funds are used effectively to keep the organisation strong. This will leave a lasting impression on banks, government and suppliers. If assets and funds are used in the wrong way, the organisation will become weak and may not survive. The 7th reason boards fail is neglecting to pay taxes. Tax matters should be handled correctly. Tax and superannuation must be paid on time. Not reporting correctly can lead to financial penalties, cash flow problems and angry taxmen. Having people who understand taxes will help to address these issues. Reason number 8 is not knowing the organisation's financial position. Financial reports indicate if funds are being managed properly. If directors are worried about the organisation's financial position, they should talk to the company auditor. Reason number 9 is trying to do everything at once. Directors need to have a clear direction on where the organisation is heading. Board governance takes time and priorities must be set years in advance. All boards should have a good idea of the organisation's mission and what success looks like. Directors and management should work in partnership to establish key goals and priorities. 10. The final reason boards fail is a lack of teamwork. Directors and management must work together. If conflict and tension arises, it can interfere with the board's ability to make decisions. Constructive conflict can improve the decisions made because it's valuable to consider many points of view. Sticking to a well thought out strategic plan will give the board a direction and will minimise conflict. Good governance is made up of many different elements: teamwork, communication, transparency, Financial audits, a code of ethics and effective reporting contributes towards an effective and productive board. And a productive board means a successful and profitable organisation.
My name is Martina Hazelbean and I'm a Larrakia Warra woman. I've just completed 15 years with NARJA in a leadership capacity and now work with Ambrose Solutions to make a positive difference in the lives of my people. As you can see from the brilliant Michael Long governance animation, we approach training in an engaging and enlightening way. Moreover, we have developed a training program called Think About Your Decision that helps build the capacity of boards. This video will give you an excellent overview of how we use a blended learning model of mentoring mats, face-to-face delivery and digital education tools to engage and train in a highly effective and culturally appropriate way.
Becoming a good board doesn't just happen. It requires focus, leadership, and a commitment to ongoing learning and development. Boards that have the right mix of skills and abilities function more effectively and are more successful in achieving the best outcomes for their organisation. Think About Your Decision is a governance-based training program established in Australia. We address the 10 most common reasons boards fail and how to avoid them. Let's look at how our program can help your board of directors succeed. In the Think About Your Decision program, we use educational tools and training methods using storytelling and imagery to explain business concepts. Our hands-on approach to learning is simple and consists of mentoring mats to help you understand the capacity building process. Our first mat features the 10 reasons boards fail and gives members a heads up as to why boards don't function correctly. The skills building mat focuses on the areas of planning, governance, financial management and human resource management, 4 areas we believe are important to build your capacity in. You can use this mat to conduct your own skills audit or gap analysis in each area to identify training needs. The board ball mat explains how the board can work as a team to ensure they achieve their goals and objectives. It's a fun approach to learning about governance by examining skill levels, the team approach, and the roles and responsibilities of a board. Next is the compliant build mat, which is used to reinforce the areas of compliance and can be used as a gap analysis. It focuses on ensuring each board member knows what is required to be compliant. And our final mat is Planet, which enables board members to work with the CEO and staff in the areas of business planning. A strong board has the right mix of skills and experience to perform at its peak. Whether you're taking up the responsibilities of a board member for the first time or you're an experienced board member looking to learn more, Think About Your Decision will help improve your knowledge and the governance of your organisation.
My name is Clint Hoffman and I'm the founder of Ambrose Solutions, a company born in the Northern Territory and now expanding nationally. As a result of developing the Think About Your Decision program, we then work with the NT government to develop a customised, digitally enabled elected member trainers guide for local government. We invest in this project as it is aligned with our philosophy of using EdTech solutions to break down the codependency between consultant trainer and the end client. We've created a digital resource that can be accessed anywhere in the Northern Territory where there's a Wi-Fi connection. This will ensure that elected members can have access to valuable educational resources without a consultant being present.
There is over 30 excellent digital videos explaining topics like understanding levels of government, functions of council, protocols for working with staff, and accounting terms. One of my favourites is conflict of interest. It's so important, so let's have a look at the way it is contextualised by our very own Shelley Morris, and then explained by a governance expert before being recapped.
Hi, I'm Shelley Morris. Welcome to Elected Member Training. Good governance is a 4-way play, knowing your responsibilities, being well informed, representing the community and making good decisions. Let's watch one of Australia's leading governance experts, Jenny Robertson, explain council business in a way we can all understand.
The concept of conflict of interest is based on the notion that a member of council's role is about benefiting the area in which they serve and the communities within it, rather than benefiting themselves or anyone they know. Conflict of interest is really born out of the idea that members of council are elected for public benefit and not personal gain. Personal gain can be seen as financial gain, or maybe a family member or friends are getting a benefit over and above other people within the community. There are serious consequences if a member of council does not disclose a conflict of interest. It's important to understand that a perceived conflict of interest can be just as damaging as an actual or legal conflict of interest. It's about making sure the council and community come first. Even the perception of a conflict of interest can damage the reputation, not only of the member of council, but the council itself. The best policy is, if in doubt, get out. One of the ways in which a conflict of interest can be managed or avoided is to make sure that as a member of council with a personal interest in a decision, that you are not a part of the decision, discussion, or voting on a particular topic. Leaving the room is one way to ensure integrity in the decision-making process and also to show people outside the decision-making process that the member of council has acted with integrity and honesty. If someone leaves the room, the minutes will show that they did not participate in the decision-making process. It will be the perfect antidote to anyone who wants to suggest that a council member has done the wrong thing or taken advantage of their role.
I hope you enjoyed watching Jen's explanation. Now let's recap the key points about conflict of interest. When a member has a private interest in the decision being made, such as financial gain or benefit to family members, this is called conflict of interest. A member of council with a private interest in a decision cannot be part of the discussion or vote on that matter. The best policy is, if in doubt, get out. This means that while the council is discussing or voting on the matter you have a private interest in, you should leave the meeting. And remember, it's okay to ask questions. You can come back and watch this video again. You can ask your council CEO for help or ask your trainer about where to get more advice.
As you can see, it is great content and it can be watched over and over again, wherever and whenever you want. You'll build capacity and also create a common language amongst members and staff. More importantly, during challenging times like COVID, it doesn't rely on a person outside of the community to deliver it.
We look forward to working with LGANT to make this resource accessible. It is optimal that it is used as a tool with a facilitator that can be within the organisation itself and be used as a continual learning tool. Thank you.